thank you everybody for the opportunity to have a quick chat with you. I think that some of the themes today are going to be resonated in our business. We're about safe and secure payments. So let me quickly go through and then we can talk from there. So what's going on, the opportunities, we've all heard the story of Asia, personal consumption, financial inclusion opportunities, urbanization, the demographic dividend of more people coming into the society and working than retiring. I think the challenges that we have are very familiar to everybody. It's the macroeconomic environment, a little bit uncertain. We've talked about regulation, the competitive landscape, the fragmentation of channels, of technology, etc. Okay, so what are we doing and where are we really focused? Really what we're looking at is a world beyond cash. Now, it sounds like a grand vision and we all talk about the use of our devices, but 85% of transactions are cash today. And so it creates a huge opportunity for us to drive efficiency and opportunities with customers of all types across the world. In developed markets, we're seeing about 55, 56% of transactions are still cash, whereas in emerging markets, they're 93%. If you go to Myanmar, which is very hot right now, I was just up there in November, literally counting bales of cash in the bank. Now, in terms of what are we doing to fix that or address that? Well, we've got to really focus on four big things, and it's relevant for Asia as it is for anywhere else. One is just acceptance growth, getting more places to pay. The second thing is how do we bring more customers into the system? And financial inclusion is particularly important in this space. There are 800 million really poor customers, really poor consumers in this region alone. And how do we bring value and how do we bring service to those people who are excluded from all the things that we expect every day? More volume, obviously in terms of product penetration, and then more transactions. How do we make those low-value transactions really convenient for you? And why are we interested in doing that? Because cash costs economies, we think between 0.5 and 1% of GDP just to print, secure, distribute, and store. But you think of all the other costs that exist in the system, particularly in Asia, particularly for emerging consumers, it's just waiting in a queue. There's corruption, there's tax evasion, illegal activity and terrorism. Don't think anybody goes and orders guns using a credit card. In terms of what are we trying to do, I think we're really trying to drive this convenience for customers. That means across all channels, online, offline, physical, digital. It doesn't mean that there's exactly the same solution for different types of markets. So for example, in emerging markets, we're looking at payroll and social benefits on the phone or on the card. We're talking about paying merchants by SMS on a mobile phone, just assuming that we're just expanding acceptance options at the point of sale. In developed markets, we're talking about MasterPass, our new wallet integrated with NFC and QR codes, or it's the contactless transactions that you use in most of the markets that you're all familiar with, as well as the everyday card. But clearly the key for us, if you like, going forward is going to be the mobile device. It gives us massive opportunities and new ways and places to pay. It empowers customers because it's a consumer-initiated transaction. I can do it when I want. We talk about the phone as for POS, phone for wages. Huge amounts of shoe leather savings for people. That's just walking and waiting. It's more secure and cuts corruption. And the quote here is quite interesting in the sense that this is in Afghanistan. They were paying police via phone, and they thought they had a 30% pay increase. But actually what had happened, they'd just taken the corruption out of the system. And so there's a huge amount of benefit that can come with mobile. So where are we trying to focus? We're really trying to be building a relevant ecosystem. That doesn't matter whether it's for affluent customers, whether it's for emerging customers. But in financial inclusion, where we can really make a difference, we're really starting to work much harder with governments, consumers, mobile POS device manufacturers, and all the NGO agencies. So talking about the partnerships that have been very much thematic throughout the day today already. So that's where we are very quickly. So I'll hand it over to you, Ian. Thank you.
Thank you, Matt. So I'm going to talk from the other end of the spectrum, which is essentially, if we think back to James Thompson's presentation this morning, where he was talking about the influencers, the 1%. And these are the people that fall into this category. And they have $3 million plus US dollars in free investable assets. And that's the important definition for us in terms of whether they're criteria clients or not. Now, whenever I'm fortunate enough to speak in a setting such as this, there's always people that come up to me and sort of say, you know, I'm really interested, you know, I'd love to know, how do you make a small fortune? And the stock answer is, you start with a big one. The value of money depreciates over time, and if you don't actively manage your money, you will find that the value of that money is diminished. What we see here in the East at the moment is fundamental growth in an economy where people need everything, and because they need everything, there is a market for everything. And the temptation is, and as we saw earlier with Raoul, when you think about the huge burgeoning middle class, whether you're selling spoons, whether you're selling knives, whether you're selling plates, or whether you're selling all the ingredients that go on those plates, there's a market for it, and it's a market that is growing, it's a market that's changing, it's a market that's adapting. And that'd be similar for the wealthy consumers as well. And it's interesting to the point that the policy of the government of the People's Republic of China has been influenced to say the advertising is too effective, take the billboards down. Remove the advertising that talks too much about extravagance and luxury because it's being too effective. China is obviously of extreme relevance to us, but don't forget the challenger economies. Don't forget the others that are hot on their heels, and I wouldn't want anybody to focus solely on a China opportunity. You know, you rightly mentioned Myanmar. We know that there are economies that have a fabulous base across Asia. Thailand is one of those, Malaysia too, and obviously Indonesia presents a very special opportunity. So special, in fact, is this region that we, working with BBC World, have commissioned a series of programs that are currently being broadcast right now. And of course, in a setting such as this, none of us have enough time to get the points across. As Phil said, he could bore us all for 2 days, and I'm sure it wouldn't be boring. I'm sure it would have been absolutely fascinating, because to see those sorts of opportunities brought to life in that way, where you can see the practical application, where somebody is thinking about how they're going to reinvent their business, is something which is both engrossing and is something which is exciting, and which will, of course, create its own opportunities. In these TV programs, what we've tried to do is to set out some of our thinking about the trends that we think are happening. And just quickly visiting the titles of the programs that are currently screening, and you can see them on BBC World, and if anybody particularly would like a copy, we can arrange that for you as well. You see the major themes that are happening and driving the economies here. I work for a firm that's been around for 320 years, and so we kind of resist passing fads. We kind of have a reflex that says, are we sure this is something for us? However, we're there on the web, we have an app, we allow people to do all the things that you'd expect to be able to do with your money through a bank. We are, to that extent, with it. I think it's important here that you look at opportunities where people will then take their money and invest. I've picked the example here of London, but we could have similarly looked at New York, we could have looked at opportunities in Asia, we could have looked at, in Australia, we could have looked at opportunities indeed in Singapore itself as being the sorts of destinations, once people have wealth, what is it they want to do? How do they want to protect themselves and protect their family? Two topics that continually come up when people achieve a level of wealth are their health and education. The first things they want are to invest into health and education. And of course, that's almost a universal truth. For everybody, that is true. Entrepreneurs the world over have certain characteristics. They're similar, but there's an increasing tendency in Asia to think about the family and the opportunities that the family presents. It's been there historically as a cultural value, and it's something that we see now expressed both in terms of philanthropy and in terms of active planning for the next generation. Influences is what I started with, and influences is what I shall finish on. In addition to thinking about the opportunities that there are around wealth, we, through Future Scopes, think about the fundamental opportunities there are, both in terms of where power will be generated in the future, how we'll feed the world in the future, how pure water will be maintained in the future, and there are real opportunities in terms of intellectual property that are being generated today. And I'm going to finish at that point, because I think we're going to get into our Q&A. Thank you.
Thanks, Ian. Thanks, Matthew. So we're going to go to the top trending question on the interactive iPad first, just to prove it works, I think. Which should come up on the screen any second now, but I will read it out. What is the biggest opportunity and trends that each of the panelists are seeing across Asia in the next 12 months? So
okay, well, it's pretty easy with us. We've got a war against cash. So the big opportunity, obviously, is displacement. If we look much broader than that, I suppose, we're just the wholesale growth of the middle class is powering a lot of our spending growth. But we're also seeing is a lot of interest in the transaction account. So a lot of people, when they talk to me, ask me, well, what's happening with credit? The real big one for us, if you look at it, is debit and prepaid across all our segments, whether that's youth, whether that's business, whether that's the middle class, and even the affluent. They're looking, what can I do with my transactional accounts? That to me is the big opportunity for us right now.
So for the wealthy, we'd see two contradictory trends. One is a confirmation of those truths that I pointed to. So, you know, the importance of education, the importance of health, and where people go and search for those services. And then the contradictory aspect of that would be the tendency to reassess certain established Western brands as necessary being the answer going forward. So a reassessment of what the local alternative might be. And so the paradox of globalization through the net ends up being a localization of an alternative. So I am instantly drawn to Google at first, and then I go and look for my in-country or in-region equivalent.
Thanks for that. I did think that there should be some contradictions, given we've got someone on my immediate right who's all about persuading people to spend money, and further right, someone who's all about trying to persuade people to save money. But hopefully we'll draw on those two trends as well. The second question is very specific, but is definitely worthy of asking, which is to Matthew, which is, MasterCard is the first credit card in Burma or Myanmar. Okay. How's this going, and how do you see the future of this market? Okay, well, yeah, just for background, we opened Myanmar in November of last year. I think just today we've just launched point of sale acceptance. I think it's going as we would expect, which is we have to be fairly careful. Toes are in the water at this point in time. But at the same time, we're pretty positive about the regulatory environment and the intention behind the government's reforms and things like that. So the key thing for us is managing the infrastructure. So when consumers go to use their cards, it's a safe, secure environment. They get the speed and the convenience that they would expect. Thanks for that. And sure. Ian, here's a question I'll start with for you, which is rapidly increasing the number of votes. Who will own customer data in the future with mobile and e-commerce? The credit card, a brand, a handset maker, the telco operator, or a platform?
So the challenge we have in banking is that we work in a regulated industry, and an increasingly regulated industry. So everything which we would like to do commercially, we can't necessarily do. There are laws that prescribe activity, and there is regulation that just means we cannot do certain things. Leads us, again, to perhaps another paradoxical outcome, which is the best person to own the data is the person to whom the data belongs, i.e. the individual. And therefore, I think it comes back to increasingly sophisticated permissioning of individuals, and what the individual will decide is the appropriate data for them to make available, either at a point in time or in the context of a transaction. So when you're buying your home, you might open up on all your assets, everything that you have, your liabilities, how you think about your health insurance, and so on. that might be relevant for that transaction. If I'm filling up the car with gas and I'm using my credit card for that, maybe I'm less willing to give out that information. However, as soon as I want to apply for a new limit on my credit card or whatever, then I've got to open up another part of my sphere. What we haven't yet shown people, I think, is that we are able to breathe with their needs, and that data can be exchanged, but then can be made secure once again. And as soon as we can start to do that, and people don't have this idea that all they leave behind is an ever-growing trail, and that trail is potentially a piece that could be used to convict them at some stage, or to refuse a credit or whatever, then I think that people have a higher level of nervousness.
Okay.
Do you concur with that?
Well, I think that just as a point of clarification, because I think that we tend to want to make it clear, is that because of the nature of our business, we actually don't hold any personally identifiable data. The only thing that runs through our system is the number, the transaction amount, date, and time of that transaction, and the merchant code. So, but from our perspective, the key thing is that privacy and the trust that comes with the transaction are paramount to our business. So the critical thing is that we're looking to ensure that we maintain as much of the relevant security protocols as possible. So we hold the participants at either side of the transaction that we gateway to very stringent data standards, because we want to ensure that the privacy of the individuals is respected and that there is no ability to compromise the integrity of the network. So for us, I think that permission-based marketing is going to be critically important. We're seeing much more regulatory interest in ensuring that those individual rights are protected, and it's only in our best interest to encourage all the actors in the system to ensure that they're respecting that data. Not exactly a direct answer, but that's sort of where we stand.
Well, I appreciate that, and I have to say that to have got to this stage in a session without having heard privacy mentioned is unusual. So we've got a couple of minutes left, so I will open the questioning to the floor if anybody has a burning question. If not, there are a few others on here that I can refer to. We're looking out into blinding bright lights, yes. So it's quite hard to see.
Someone knows it. Yeah.
My question is, my name is Milind Agarwal. I represent Gupshup mobile community platform from India and Indonesia. My question is, can MasterCard work with mobile operators and create a micro payment gateway for small, medium, and micro enterprises? It's a big challenge to collect small amounts of money for various purposes for micro and small, medium enterprises. Is that on your roadmap, or?
Sure. I mean, I think that I would probably, you're asking me just about low-value payments or very small payments. I think the issue for us as we move into these emerging segments where transaction values are very small, whether it's in India, if I'm going to Reliance and I'm spending 13 rupees on a transaction or something like that. I think that the answer for us is that we need to ensure that if we're going to make that ecosystem happen, that we're looking at the economics of that business and appropriately adjusting ourselves and our business models. I think it's critically important that we understand the local environment, that we look to develop the ecosystem around the payment, and also look to adjust our business models to ensure that we're creating success. I know we were talking earlier about scale. I think that the critical thing is people and businesses react to incentives, and we need to create the relevant incentives to ensure that those transactions can happen and that the convenience of getting cash out of the system is there. So to answer your question, we're very much looking at low-value payments and recognizing that we're in fact going to have to change our economic model, just in the same way as, for example, for charity donations, we don't apply certain types of charges in our business. So certainly that would be the intention.
I think we've got time for one other question, if anyone would like to ask. If not, I can just quickly ask either or both of you to sum up with how you feel that you should continue to measure or monitor your activity to ensure that you're keeping up with consumer trends in Asia.
So I think nothing replaces regular sampling, regular research. That's a given, and it's just a good discipline. I am perhaps speaking with a bias from a regulated industry, but I am very nervous of firms that give up the editorial integrity of everything. I think there is something to be said for holding the pen and ensuring that the trace that is left about your brand online, in different media, where others will come across it, is something that you regularly filter and that you look at and that you manage actively. I don't think you should leave it to the hazard of the market and whatever people choose to say about, for or against you online. So rigorous management would be my tip.
Okay. Well, I think for us, I think the key thing is keeping on top of things. Is obviously I'll echo your point on research and really understanding the channels that we're seeing. We're seeing this major convergence of channels. So critically, that's going to be something we're going to have to keep on top of. In fact, if anything, it's going to be exported out of Asia back to the rest of the world. And so a lot of the things that we're doing first. Whether it's in Africa, or it's in China, or it's in India, or it's in Indonesia, we're starting to do those first. So I think that in many cases, staying on top of the business requires us to stay on top of the markets here and really ensuring that we're bringing relevant solutions to the overall marketplace.
Great, thanks very much.
Okay.
Ian, Matthew.
Thank you.
Thank you.